Alright, so welcome to the trend continuation entry. I call it TCE strategy. And this is basically an upgrade of my original moving average bounce strategy. So this particular upgrade strategy is a lot more flexible. You can find a lot more trades in a month. At the same time, it's got a much higher win rate and profit expectancy. So let's get down to it. So this strategy seeks to go long on forex pairs as it makes a dip on a strong uptrend. At the same time, we're going to go short on FX pairs as it makes a strong rally on a downtrend. So again, let's understand the concept here. Remember that a strong uptrend over here is defined as the price making higher highs and higher lows, right? So you have to see a series of, again, higher highs and a series of higher lows. And that's what defines a strong uptrend. And again, remember that on an uptrend, the price moves in impulse and corrective waves. So from here to here, we call this the impulsive wave. Or rather, we also call it the A to B wave. So the impulsive wave is the wave in the direction of the trend. So remember that the impulsive wave can't continue forever. Okay, it has to go through what we call a minor correction. So we've got an impulsive wave, a corrective wave, and then the next impulsive wave, and then the next corrective wave, and the pattern continues. And again, impulsive wave represents kind of like the breathing out pattern, right? So you breathe out, right? You breathe out, and you got to breathe in the corrective wave before breathing out again. Now, on an uptrend, the corrective wave is also known as a dip, right? So it's making a dip on the overall uptrend. So our job is to identify these clear patterns, and we're going to go long right at the dip, all right? So just as it dips, before it goes to the next impulsive wave, we're going to enter right here. We're going to go long, and we're going to exit somewhere over there for our profit. And we're going to exit before the next dip or the next corrective wave on an uptrend. So conceptually, that's the whole idea. Now, at the same time, on a downtrend, right, it's defined as lower highs and lower lows. So again, we've got lower highs and lower lows. So that's what defines a downtrend. And again, on a downtrend, the impulsive wave is the wave in the direction of the trend. So which is the impulsive wave? This is the impulsive wave, right? So impulsive wave goes down and corrective wave goes up. Then impulsive wave goes down, corrective wave goes up, and it continues, right? So again, on a downtrend, the corrective wave is known as a rally, right? A rally is a short-term movement up before the next impulsive wave down. So on a downtrend, we're looking to go short, to sell at the end of a corrective wave. And we're going to sell over here, we're going to short over here, right, to catch the next impulsive wave down. Okay, so that's the whole idea of the strategy. So you can use this, I would guess, on many time frames, but personally, I only trade this on the 15-minute candle time frame, and it's worked the best on the 15-minute candles. You can use it on other time frames, but again, this is my favorite time frame, which I trade every single day. Frequency of trades, it can be anywhere from 10 to 15 trades a month or even more. Okay, average win rate is about 50 to 60%. And the average risk to return ratio is 1:2. So risking 1 hour to make 2 hours on average. Okay. Now this works on all forex pairs of major currencies. All right. So again, get pound USD, Euro USD, dollar USD, dollar franc, dollar CAD. 8 major currencies and all the cross pairs. All right. Again, as usual, when you're doing day trading, you want to use a broker that has got very tight spreads, okay, of, ideally 1 to 2 spread minimum when you enter the trade. There are times during the day when the spread widens to, 3 or 4 pips, and we're not interested in those times. We want to enter when spreads are tight. Okay. So once you understand the concept, let's go into details now. First of all, again, how do we define an uptrend? So an uptrend is when we're going to go long on the forex pair. Okay, so and a forex pair is defined to be on an uptrend when two things happen. So you got to have these two conditions before going long. Number one, you want to see the moving averages in sequence from the smallest moving average to the biggest moving average. And we're going to use basically 3 moving averages for this. So we must see the 18 exponential moving average, 18 EMA, above the 50 EMA. And the 50 EMA should be above the 200 simple moving average. So again, when you're setting your charts, you have to set your charts with these specific moving averages. Okay. Now notice that in all the different strategies I use, whether is it impulse pullback or trend continuation, I tend to use the same set of moving averages. All right. So I just use the same moving averages, but I look at the different moving averages for that specific strategy. Okay. Next, on an uptrend, you must see that the current swing high is higher than the previous swing high, and the current swing low is higher than the previous swing low. So you must see this pattern before taking a trade. Okay. So again, let me explain from this illustration over here. So again, we are going to buy right at this point, okay, to catch the impulsive wave up. Now, before we enter, we must see that the current high, right, the current swing high is higher than the previous swing high. We got to see that pattern. And the current swing low in which we are entering, so we are always entering at the current swing low, okay? The current swing low has to be higher than the previous swing low. So we got to see higher highs and higher lows. And we're entering at this low right now, okay? So you got to see this pattern, and that's what defines a strong uptrend. So on the right, you can see it appear on a chart. And again, you have to identify that pattern, right? So right now we are at this current swing low, okay? And it's kind of like, bouncing off this 50 moving average. And again, we are going to buy over here. We're going to buy over here, okay? So again, before we buy, we have to ensure that the current low is higher than the previous swing low. So this is a swing low pattern. That's a swing low pattern. This low has to be higher than that low, okay? And the current high, which is the kind of like the most recent swing high, must be above the previous swing high. So again, you got to see that pattern: higher highs and higher lows, right? Now, it is not always that this pattern appears. So you only take it when this pattern appears. And on a particular day, it may not appear at all, or it may only appear once or twice. So you got to look out for it. All right, guys? And again, you can see the moving averages in sequence. So the 18 EMA, which is this thin blue line. So the thin blue line is the 18 EMA, right? Has got to be above the 50 EMA, the thick blue line. And the 50 EMA has to be above the 200 SMA. All right, so you got to see that clear pattern. All right, so once you're familiar with that, let's look at the opposite, which is defining a downtrend. Okay, so the opposite. A forex pair is defined to be on a clear downtrend when, again, the moving averages are in sequence, but from the biggest moving average to the smallest moving average. So now we're going to see the opposite. So the 18 EMA has to be below the 50 EMA, and the 50 EMA is below the 200 SMA. So you've got to see that downtrend sequence. Next, we want to ensure that the current swing high is lower than the previous swing high, and the current swing low is lower than the previous swing low. Again, to illustrate, take a look at this graphic over here. Okay, so we want to see this particular pattern of lower highs and lower lows. Okay, so where's our entry? When do we go short? We are entering at the current high. All right, we're going to enter somewhere there at the current high to catch the next impulsive wave down. So before you enter, you have to ensure that this current high which you're entering is lower than the previous swing high. Okay, and the current low, which is the most recent low, is lower than the previous low. So you have to see that pattern, lower highs and lower lows. Again, this doesn't always happen in the markets. So you've got to be patient to wait for this particular pattern to take the trade. Okay, so on the right, you can see it on the actual chart. All right, so we are entering here. Okay, we're going to do a short entry here as the price begins to go on the new impulsive wave down. So again, how do you know that it's going to go down? Well, again, you're looking for that wave pattern, right? So again, this is the current high, which we are now shorting, all right? So the current high has to be below the previous high. So there's a current swing high below the previous swing high, and the most recent or current swing low is below the previous swing low. Okay, so you got to recognize that pattern, guys. Yeah. And again, notice the moving averages in sequence. So you can see the 18 EMA, which is this blue line, is below the 50 EMA, and the 50 EMA is below the 200 SMA. So you got to have that sequence, all right? Now, do notice there's also a red line here, which is the 6 EMA. So for this strategy, you ignore the 6 EMA, all right? Ignore it, because the 6 EMA is only used in the impulse pullback strategy that was in level 1 of the course, all right? So although it's in the charts, but we don't look at it. We just look at the 80, the 50, and the 200. Okay, so do understand this concept clearly before we move on. All right, so let's look at the charts and let's see if we can identify these uptrend wave patterns. Now, I assume by now you already know how to set up your charts with the moving averages. And if you have not, please do so. It is all taught in the basic level 1 of this Forex course. Okay, so what I do is, again, I'm looking at the 50-minute candles. That's the primary time frame I will trade in. And later I'll teach you that I will also look at the hourly candles to confirm the trend, to ensure that the 50-minute candles and the hourly candles are both aligned on the same trend. Now, down here you can see that I have all the different Forex pairs. And I kind of like look through them during the day to look for the clear uptrend or downtrend pattern and to see if there's an opportunity to go long or to go short. All right, so you can actually place all the different pairs down below. Okay, and I'm going to show you how to spot these patterns. Okay. Okay, so again, what are we looking for? Well, again, we are looking for an uptrend pattern like that. Okay, we're looking for this pattern, right? Where we have got higher highs and higher lows. Okay, so the current swing high must be higher than the previous swing high, and the current swing low must be higher than the previous swing low. And we're looking at this point to buy, right? To enter at this point. Now, again, later you will learn that we need to have a trigger price action. We need to have a price action trigger to tell us exactly when to buy. And I'll cover that in a while. So for now, I just want you to be able to spot this pattern, right? These higher high and higher low pattern in the charts. Okay, so let's take a look over here. And in fact, this is a New Zealand yen. I did take a trade just yesterday when I spotted this pattern. Now, can you see, can you spot that pattern here? Okay, there you go. So the pattern is here. Okay, so we see that pattern like that. Okay, so this swing high is higher than the previous swing high. Okay, and this swing low is higher than the previous swing low, right? So this is where we buy. Okay, we buy to catch the trend up and we exit somewhere here. So this is our quick profit over there, right? We enter at the start of a new impulsive wave and we want to exit before the next corrective wave down, right? So that was the pattern over there. And let's look back and see if we can spot any more of these patterns. So this would be one where the pattern is not right. Okay, so this is a wrong pattern. Why? Let's take a look. So would you want to get in somewhere here? No. Why? Because you can see that this current swing low is lower than the previous swing low. All right, so that is not allowed. Okay, so although the current swing, let me repeat that, sorry. So although the current swing low is higher than the previous swing low, right, we have got higher lows, okay, but we have got lower highs. Okay, so this is not a valid pattern, right? So I would not enter over there. Okay, so remember that I want to see right, higher highs and higher lows. Okay, so if I were to enter here, all right, again, I want to ensure that this swing high, the current swing high, is higher than the previous swing high. Okay, so if this was here, for example, like that, then this would make a great entry. Okay, because this must be higher than the previous swing high, and this current swing low must be higher than the previous swing low. All right, so in this case, it is not. Okay, now some of you may be wondering, say, you know, Adam, could this be a swing high? Right? Could this swing high be higher than this swing high? Now, I wouldn't really take this as a swing high. Okay, why? Because again, I want to see an up, down pattern. Okay, whereas this pattern is not, it's just a few candles. I want to see the entire wave of it going up like that, right? So this is too small of a wave to be significant. So through experience, you begin to know what are the right wave patterns, right? So let's go back and see if you can find any more of these. All right, there we go. So this is another, okay, is this a valid pattern? Again, this is not a valid pattern, right? Why? So take a look at this like that. Can you see that? So again, it makes higher lows, right? But it makes lower highs. So again, this is not a valid pattern, right? So we don't want that either. So we wouldn't buy over here. Now, although if you had bought here, you can see that it would have been a profitable trade, right? So this would have been a winning trade, but it would not be part of this strategy. So sometimes you may find that, hey, it doesn't meet the rules, but it still goes up. And that's fine, because in the short term, price movement is random. So I'm not interested in, hey, did it eventually go up, go down? I'm interested in consistently following the rules, because by following the rules, I know that in the long run, I will be extremely profitable. Okay, so let me go back and see if I can find a valid pattern again. Okay, so this is a valid pattern. Can you see that? There we go. This is a valid pattern, right? So I would enter to go long somewhere over here, because again, the current swing high is higher than the previous swing high. Can you see that? And the current swing low is higher than the previous swing low. So I've got higher highs, I've got a higher high pattern, and I've got a higher low pattern. All right, so that's what I'm looking for, right? Let's look at some other pairs. You can look at dollar Canadian, for example, and see if you can spot another pattern going up. Okay, this is another valid pattern. Here we go. Can you see? Higher highs and higher lows, right? So we could potentially enter here, right, to catch the next wave up, okay? And again, notice that the moving averages must be in sequence. The 18 EMA is above the 50, 50 above the 200, all right? All right, great. So I hope you now get a clearer idea of how to look for these uptrend wave patterns. Now let's look at a downtrend wave pattern. So again, for downtrend wave patterns, it's the opposite. We're looking for a pattern like that. Okay, so lower highs and lower lows. And we're going to enter at this current high to catch the next impulsive wave down. So let's scroll back and see if we can find a good example of this pattern forming. Okay. Okay, there we have. We've got a pattern over here, right? So here we go, right? So lower highs and lower lows. There we go. We've got a pattern, right? Great. So we can enter here for a short. Once we see a price action trigger, and again, I've not taught you this yet, so hold on. In a short while, you learn what is a specific price action trigger, a set of candlestick patterns that tell us to go short. And again, notice that the moving averages are in the downtrend sequence. The 18 EMA is below the 50 is below the 200, right? So let's see if we can find another one of these patterns when it's on a downtrend. Oh, since we're here, another uptrend pattern. You see higher highs and higher lows. Okay, so you have got that uptrend pattern. There you go. And you can again look to go long here to catch the next impulsive wave up. Right, which you did. Okay. Okay, let's look for another downtrend pattern. This is another pattern. There you go, right? So lower highs and lower lows. There you go, right? So we have got that downtrend pattern, right? So again, notice that this swing high, the current swing high is lower than the previous swing high, and the current swing low is lower than the previous swing low. So we have got that pattern, and again, we can look to go short over that to catch the next impulsive wave down, right? Which it did, right? You can see the wave went down. Okay. Again, this was another impulsive wave up. As you can see, there we go. Right, so higher highs and higher lows. All right, so understand that? All right, then we go, we look to go long here if we see again the price action trigger. And again, you're going to learn that in a while, so hold on to your horses, right? Okay, again, another pattern over here you can see. Okay. There we go, right? Higher highs and higher lows. There we go. And we look to again go long over here. So you have to get really familiar with looking for this pattern. Okay, and I'm looking for a downtrend pattern, another downtrend pattern to show you so you get a good idea of the downtrend pattern. Okay. Okay, so this was a valid downtrend pattern again. You can see again, let's take a look. There we go, right? So lower highs, right, and lower lows. There we go, right? And again, we look to go short over here, all right? So this is a valid trade, but again, this particular valid trade would have been a losing trade because you would have entered here, you have gone down, you would not have hit your profit target, you would have gone up to hit your stop loss. So, and that's fine, all right? Because again, remember that in trading, not every valid trade is a winning trade. You have losing trades as well. And that would have been a losing trade, but that would have been a valid trade. Okay, that would have been a valid trade, right? So that's another valid trade, right? So lower highs and lower lows. There we go. And we look to go short over here, right? To sell, to catch the next impulsive wave down. So again, in this case, it would have been a winning trade. Boom, there you go. Okay, so I hope you got a pretty good idea of looking for these uptrend and downtrend wave patterns. Alright, now for those of you who find it challenging to identify the higher highs and higher lows, you can actually use an indicator to assist you. And the indicator you can use is over here. Let me just click on this, insert, indicators, go to custom, and look for ZigZag, right? So go to ZigZag, click on ZigZag, and you want to, now by default it says 1253, you want to change this to 6, and for the colors I like to change it to red, to black, and width I can put it slightly a bit thicker at number 2. Okay, so click OK, and once you do that, you can see that this indicator actually helps you to draw the higher highs and higher lows, right? So it's a lot easier to identify these patterns, right? So for example, you can see over here, right? It identifies that, oops, hold on a second. This was a higher high and higher low, right? So this was a potential trade over here with the bullish engulfing pattern, right? As it bounces off, I believe it's the Fibonacci support level. Okay, and if you want to save it into your charts, you can just right click and go to template and click save the template. So you can save it as ZigZag with your moving averages, for example. Click save, right? So I've already got it saved, and for example, so every time I go to a new chart, like go to this chart, for example, oops, I actually have this ZigZag indicator on many of my charts already. All right, let me choose one that's not. Okay. Like this one, all right? So I just right click and I go to template and I go load the template, and that's right, I'm going to ZigZag. Oops, hold on. There we go, ZigZag moving averages. Boom. Right, there we go. All right, so again, the zigzags over there, and helps you to identify the trends.